All right, guys and gals, back in the action once again. It's about that time of day again here, folks. Wednesday evening, January 15th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me. I help traders find high-quality trade setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. Tonight, my job is to help you find the best levels of support and resistance, the best entries and exit setups for tomorrow. But most importantly, my job tonight is very important to help keep you out of trouble by identifying and avoiding the most common predictable traps for tomorrow. That's Thursday's trading session. And we have a lot to cover in tonight's video. We're going to grab some charts here tonight. I got some oil, some S&P, some Nasdaq, and of course, we'll wrap tonight on the gold. Oil looks like a big short covering rally. The S&P looks like it has its eyes on that 3,300. We'll see if they can make it. The Nasdaq, boy, they fended off the bears on the Nasdaq, but I see some headwinds coming for the bulls on the Nasdaq. I'm not too keen on buying here. We'll grab some spots to buy the Nasdaq tomorrow. And how about that gold? Gold just retested highs. They're trying to go higher tomorrow, but I've got some possible ranges we're watching on the gold for tomorrow. So we got a lot to cover tonight on the charts. I'm also going to grab a look at the calendar for tomorrow. It's earnings season. I want to make sure you're aware of that. We've also got some big news tomorrow shortly before the opening bell. I want to make sure you know exactly when to be sitting on hands, when to find the best setups for tomorrow. And as always, don't forget, if you're here for the first time, make sure you subscribe to our YouTube channel. Hit that thumbs up button if you like the video. And if you have any questions, drop those questions in the comment section below, or if you have any other video topics that you want me to cover on this newsletter, that's the comment section is for. So drop those ideas, drop the feedback and the questions in the comment section below. Subscribe to the channel, right? That way you never miss another newsletter. And as always, right, great to be here with you. Let's not waste any time though. Let's jump into the video for tonight. I'm going to grab the economic news calendar first because like I said earlier, we got some earnings coming out here this week. We've got some big news for tomorrow. Let's take a look at the schedule for tomorrow. Tomorrow, of course, is Thursday, January the 16th. What do we have on the schedule? Well, again, as I mentioned at the beginning of the week this week, we've got earnings coming out here. That means earnings in the pre-market, earnings in the post-market. So if you're in Asia, if you're in Europe, be aware, right? You're going to have markets like the Nasdaq and the S&P and any other kind of smaller markets that subsidiaries of those that will be affected by these earnings reports. The best way to find a schedule of earnings, go right to the Nasdaq website, right? And of course, search for earnings season, and you can find a list of all of the equities that are going to be reporting before the market opens and after the market closes. I'm not going to worry too much about the specific equities that have earnings for tomorrow because, as always, I focus on the meat and potatoes in our trade room. We open up every morning at 8 o'clock Eastern time. So I'm going to focus on, right, the big chunk right in the middle here tomorrow. So what do we have scheduled for tomorrow? As you can see, get a slew of news right out the gate here tomorrow morning. Jobless claims, Philly Fed, retail sales. Obviously, the big news number tomorrow will be that retail sales number at 8:30 Eastern time. Tomorrow should be a pretty busy day, I would imagine. Today, of course, being Wednesday, we had the infamous phase one trade deal that got signed. They actually signed it. I think they signed it. I saw them both, right, signing it this afternoon, right, on the interweb. So I'm pretty sure they signed it. I think tomorrow, though, will really be a test of the will of these markets. We saw some disappointing news earlier this week. The markets shrugged it off. We saw the trade deal get signed this afternoon. Markets dipped, as you probably noticed, but very strong reaction from the buyers buying those dips. I think tomorrow will really be the test of the strength of these markets. I think a lot of people will probably be diving into the notes from that trade deal. And so I would imagine tomorrow, once some of the bigger investment banks get their hands on the phase one information, once the interwebs get a chance to digest it, tomorrow will really be, I think, a very busy day and really filled with trading opportunities. I would also imagine tomorrow should be a full trading session. And I say that because on Friday this week, don't forget, we've got that MLK holiday weekend. This is the first kind of holiday break after the big push of the new year. Typically, that Friday is going to be a very short session on Friday. That will be, of course, not tomorrow, but Friday the 17th. So tomorrow, I would say a lot of traders tomorrow should be getting to their desks early tomorrow, right? Definitely pack a lunch because it will probably be a very busy session. We expect to have another great day tomorrow in our trade room. We open up every morning at 8 o'clock Eastern time. We'll have that retail sales number right in front of us tomorrow morning. I want to see you there with me, so make sure you get registered and come join me tomorrow at 8 o'clock Eastern time, and we're going to execute the entire strategy together. In the meantime, though, let's grab some charts. We have a lot to cover. Got the oil setting up for a short covering rally. S&P shrugging off the bears and eyeing a retest of the high. Nasdaq wants to retest the high, but look closely on the Nasdaq chart. And I got a big clue in the Nasdaq we'll go over tonight. And of course, the gold looks really strong, but I see some headwinds on the gold right now. We'll talk about that, obviously, in more detail tonight as well. First of all, though, I want to jump into the crude oil futures because, well, after all, oil started the week off, right, inside of a trading range. Range-bound markets tell me to buy low, sell high, and avoid the middle. We've got that very strong move down. It looks like right now, it looks like these bulls are setting up here for quite the short covering rally. You'll notice I've got this, what I call an inverted triangle or an expanding triangle, and this could really be a pretty impressive rally back up to some big round numbers overhead. Before we get too committed, though, to that big rally, there's one big elephant in the room. Do you see the elephant? We always talk about this on the newsletter. What's the big elephant in the room? The big elephant in the room is this big, strong move down. Right? Until those buyers can take out those highs, there is always, anytime we see a strong move in one direction, we know there's always potential and a likelihood that we'll get another leg in the same direction, right? We talked about this earlier this week. I think it was late last week as well. So even though I do anticipate this short covering rally and potentially a pretty darn good move here for those bulls, again, I can't deny the fact that we've got that very strong move down after the inventory report came out this morning. Yeah, I will definitely agree. The bulls look pretty strong here right now, but I've learned over the years that anytime I see a strong move, until we can take out those highs up around that 58.40 area, don't be surprised if we see this thing double top and run right back down again. So that is something that is on my radar here in the next couple hours, right? First of all, though, who has control of this market? I think that will be a good place to start here, right? So we know it's a range. What does a range tell me, right? Buy low, sell high. So we're trying to be a buyer off of that low. We got that strong move down. It does look like we've got some pretty good momentum going higher here for the bulls. So I do want to be a buyer because, after all, it is a range. I do want to be a buyer. I'm not too keen on selling this market right now. I don't think the short side would be the more reliable side right now. We'll talk about what I would look for a short, right? Sellers, of course, want to get down to that finish off that measured move to low. Buyers want to get back up to retest those highs. So let's talk about some setups I'm watching for right now as we zoom in closer on this chart, right? I'd like to be a buyer. The problem, though, is that I see here on the oil is as we go higher, where do we go? We go right back up into that trading range. So in all reality, there's really three kind of situations I want you to be ready for, that I should be ready for tomorrow, right, in my trade room. One of them, of course, is a pullback. Second one would be up into a range, and third would be a strong break through that range. Those are three scenarios I want to make sure we are getting ready for tomorrow. The first one, of course, is that pullback. Now, like I said earlier, I wouldn't be surprised if we see a double top off of these highs and see a relatively strong push lower. Now, this is where the magic happens, right? I'm anticipating that sellers are going to try to chase this thing lower, right? They're going to think they're going to get in on the way down to that measured move. What I'm hoping is I'm hoping that will go up, double top this high, pull back, and then I can catch those sellers trying to sell that pullback with a failure pattern and buy literally right into their failure, right? So I'm kind of playing the game right now, right? I'm kind of playing the game. I know there's that big move down. I know if I can get that pullback down around the low of what I'm calling a hidden channel, right? I know I can look for buyers down there. The problem though is I got that big elephant in the room, and I'm imagining now if we get that strong shot lower, I would imagine now sellers are going to come in. They're going to try to hold that pullback and run it lower, right, to retest that low here. And if they fail, right, that'll be an easy seller failure pattern into bullish pullback combination. One of my favorite setups, especially when I know there's potential for a strong shot lower. So again, kind of recap here. If I can get that strong shot lower, get underneath the moving average, get down around the low of this hidden channel, really get into this battle zone down here, right? Get us pulling back here. Get these sellers to chase after it, right? Try to sell that. Now I know exactly where their stops are, and I know exactly where I can buy this thing now, right? As we go back up into that trading range. Remember, it's a range market right now, so buy low, sell high. The range is the big magnet. That's the most important thing that you want to keep an eye for tomorrow. Now, another problem we have here is the market keeps going higher, right? So second scenario will be we keep going higher here, right, for those bulls. Number two here now would be we go up and we start getting chopped up inside the range up here. This is likely just because it is a range. Now, once I see the market commit inside that range now, the job is actually pretty simple, right? I've had this buy zone on the chart. This is the same buy zone we've had here all week this week. So if I can see us go up into that range, it's almost as if this big move down never happened. And now I'm just simply trying to fade those breakouts. My favorite entry pattern for a range environment is always going to be a failure. I wait for those moves to get below the range. I wait for those breakout pullback sellers to try to sell off the moving average, and I look for that buy to go right back up into the range. Again, continuing with this theme of buying back up into that trading range. So that's another scenario I'm getting ready for here tomorrow. The third scenario is the one that really could happen here. You've got all this bearishness, right? Just signed a new trade deal here in the US. Maybe the markets see that as a reason for increasing demand of oil, right? That could definitely happen, right? Markets could interpret this as being a bullish signal for oil. So what if we rip as we're going higher here? There are really two patterns I'm looking for right now as we go higher. I'm going to delete this off the chart here, keep it clean. There are two patterns I'm watching for as we go higher. One of them will be kind of the most, the most reliable of the patterns. Again, we know the range is going to be a big magnet here. Most importantly here, if I can get a move up, a pullback, and show me some proof that these buyers are okay buying through that range. This is the thing. I don't want to buy the pullback inside the range because, again, remember, look left. It's a range in here, right? You don't want to trade inside that range. So rather than trying to buy that pullback, I would rather wait for those buyers to show me proof. You know, and I know this is not easy sometimes. I know it's not easy to let the market show us first, but let's put it this way. I'd much rather sit on my hands, wait for those buyers to show me proof, because what might happen is it may go up and then come right back down again, and I'll be waiting again to be buying underneath that low, right? We talked about that here already. So again, I want to see, can we go up? Can we actually hold a pullback? And can we make a run off that moving average? If we can, now the writing's on the wall, right? Now we have that trend line I marked up, right? Now we have that big short covering rally. Everybody will start getting excited about this, and I'm going to start looking for my entry. I'll plot that high. I'll draw a trend line off of those higher highs. I'll draw a trend line off that major low down there, create that hidden channel. That will give me now, right, my what I call a 1, 2, 3 breakout, right? That is 1, strong move up, 2, pull back to the moving average, 3, right, is a strong move off the moving average. We call these 1, 2, 3 breakouts into a hidden channel pullback. Now, obviously, that will take some time. Wait for it to go up, hold the pullback and go, and then we'll buy that low of that channel. What is a very high likelihood is anytime we have potential for a short covering rally, the market tends to spike. And if it spikes because of the bears getting out, if it spikes for whatever reason, it doesn't really matter to me, to be honest with you. But if we spike going higher, a very effective pattern I like to use is called a 2-try breakout pattern. If I see a real strong spike going higher, I simply wait for a profit-taking pullback. Then I look for a higher high, followed by sellers committing, right? This on the chart, this looks like just simply two bear attempts, right? But in all reality, the first one is actually profit taking by the bulls. The second one are the sellers trying to pick that top, right? But what I'm looking for now is I'm looking for, as that moving average comes over, I'm looking for those buyers now to come roaring in off of that EMA. At that point now, where are stops? Stops are sitting right above that high, and you need those stops because they're going to be the fuel, because after all, you're buying relatively high with that, what I call a 2-try breakout pattern. So real quick here, just to recap, for the buy side here, right, I'm looking for a seller failure into a pullback combination, right? Looking to get underneath that kind of hidden channel down inside that 5780 to 5760 area, right? Get those sellers who are trying to retest those lows, get those sellers to wrap that rope right around their neck so I can buy into those stop losses. And of course, we get lucky, right? Buy that pullback before we get back up into that trading range. As we go higher, I'm watching those ranges form, right? Get underneath the range, seller failure, right? To be buying underneath the range, or 1, 2, 3, breakout higher, mark the high, mark the low, buying that low, or that strong move up, 1 try for the bears, 2 try for the bears, and literally buying right into those stop losses. Now again, right, make no mistake about it, the big magnet is that range, but if we can push through that range though, man, oh man, we got some big tops up there, 58.77, and that trading, right, that expanding triangle. You know, it's a little much to say 59, but it's only $1 away right now. So the high of that expanding triangle is a great carrot at the end of the stick there for those buyers. Now, how about some sellers here? Right? How do we sell this market right now? I'm glad you asked. First of all, we know we got, again, the big elephant in the room, right? That big move down. So if we get a strong move down, I'm going to look for that same 2-try pattern I mentioned earlier, but now I'm going to look for a trap. You always got to make sure you know where the market wants to go. The market wants to go back to 57.36. So if we blow right through that low, now my favorite pattern is going to be a trap high up here, right? Trap highs. Now again, I call this a 2-try trap pattern. Okay, what's going to happen is we'll see that strong move down. That's going to give everybody the FOMO of missing out on the low, on the retest of that low. Again, profit taking is the first one. Buyers will come in the second one, and we need that trap high because you don't want to be selling too close to that low, right? That is a great setup. Again, I call it a 2-try trap pattern off of that low. And then how do we sell as we go? I think the only way you can sell this market high is if we get stuck back in that range. Because if this market rips higher here, the last thing I want to do is sit in front of that freight train. So if we go back into that range right now and we start sitting sideways here, okay, can I sell above that high? I can, but the bull momentum will tell me, instead of your typical buyer failure pattern, which would be great in a bear market, I'm looking for a slight variation of this, which I call a nested. And basically nesteds are, or nested failure pattern. It just means I'm waiting for the buyers to try twice, right? Think about it this way. If the market goes sideways inside of that range, I'm looking to buy underneath it. And to buy underneath it, all I do is I look for those sellers to get trapped, right? Basically sell that breakout pullback, and I'm literally buying into the stop losses of those counter trend sellers, right? Using the range as my guide. But imagine now if we go higher, right? We go above the range now. Now I'm not going with momentum. I'm going against momentum. So I got to be careful. I want the buyers try once, buyers try twice, and then I can sell it, right? So it's a failure pattern. It's a buyer failure, but it's called a nested failure. It's a slightly more conservative because obviously, right, you've got those bulls in full control, right? So once we see the buyers try once, try twice, now look for that nice strong signal selling above the range, avoiding the middle of that trading range. So now we got a pretty good plan here, right, as we go. I'm ready for the market pulling back. I'm ready for the market going higher in a couple different scenarios. The key right now is, do we get stuck inside that range? Do we go through that range? Do we retest these lows? Got a lot of potential here for tomorrow for that short covering rally, but we have to wait for more information. Now, I've covered a lot so far in the first 20 minutes of this video. In fact, we've talked about failure patterns, nested failures, breakout patterns, trap patterns. If you're here for the first time right now, all of this terminology might be a little bit too much. I definitely understand that. So to make it easier for you, I would definitely encourage you, grab my free trading course. As part of the free course, you'll learn all about all of these entry patterns, right? You'll see hundreds of examples of those patterns in our favorite futures markets. You'll learn the same strategy that we use every morning in our trade room, right? I'll also give you a free pass to come out and join me as a guest in the trade room. So make sure you grab that free course. I'll put a link up there in the upper right-hand corner. And don't forget, if you're on YouTube right now, all the links I'm talking about tonight will be in the description of that YouTube video, right? If you're on the blog right now at Sideways Markets, I'll put a big red button for you below the video tonight on the trading blog. So oil is looking pretty good here, right? Oil's looking pretty good. I've got a plan for oil ready to go there. Don't forget, tomorrow morning, 8 o'clock Eastern time. How about some S&P though right now? Let's keep this party rolling here. Over on the S&P, what do we know about the S&P besides the fact that, right, the S&P really did a great job at defending those lows here today, didn't it? We got a bullish market into a trading range. I think the most important thing on the chart right now is this right here, right? That bull move into a trading range. And the reason why I say that is because you can see those bears, they made a very strong effort to take out those lows, and they were unsuccessful. Okay, now I can't say the same thing is true for the Nasdaq. We'll take a look at that in the Nasdaq. The Nasdaq was not able to hold off those lows, which really makes this a very different story on the Nasdaq. So the S&P and the Nasdaq are really very similar, but they are very different in that environment where the bears, they tried, but they were unable to knock out those bulls. And that really adds fuel to the confidence, right, of these bulls right now. So what do we know about this range, though? It's very narrow. You notice that? Notice how narrow that range is? Anytime I see a narrow range, I always know I have to get bigger breakouts because it's the only way to get good risk-reward ratios, right? So sometimes ranges are really wide. Sometimes ranges can be very narrow. When I have a very narrow range, I like to use these sell zones and buy zones that are a little bit wider. Right? You'll notice that most of the time when I have a range on my chart, right, I'll put the buy zones right there, the sell zones right there. They'll be relatively tight. When I have a really narrow range, though, I have to widen these out. And this has a lot to do with market psychology. And we talk about market psychology nonstop in our trade room. It's all about psychology, right? The markets are filled with human beings. Human beings have fear and greed, right? They want to make money. They don't want to lose money. And the size of that range is possibly one of the biggest clues we have on this chart, because you'll notice, right, they really try to get outside that range to get it back in. And again, this is all kind of post-trade deal right now. So narrow range, again, narrow range is important because it tells me wait for deep pullbacks to buy low and sell high. What else do we know right now? They have their own big elephant in the room here, don't they, right? Look at this big, strong move up. They're just about to take out the highs here from that last big move down. So buyers look very, very good right now. Oil, are you paying attention? Right? If the oil bulls are watching my newsletter right now, pay attention. This is what the oil bulls need. They need to keep this party going higher here as well. But the S&P is clearly in the hands of the bulls right now. Anytime I see a strong move in one direction, I anticipate another leg in the same direction. So we are on track to be a buyer at a level of support. And of course, right, the hidden channel got marked up. That hidden channel, I like that hidden channel. I'm starting to think, though, right, I might want to draw that channel a bit wider, right? Something like that. I like that even better, right? So that's going to give me a nice level of support to allow me to buy nice and low. And again, why do I want to buy nice and low? Because the range is so narrow. Like I said earlier, that's a big, big clue. So I've got that on my radar right now. Range highs, of course, right? Buyers want to get back up to retest range highs. But just like on oil, I always like to leave those resistance trend lines overhead because we have to assume 3,300, right? The battle's on up top here. That looks to be a really easy magnet for these buyers. But remember though, right now, short term, what's the big objective? The objective right now, at least for now, is 96 3/4. The reason why it's important is because once we get up in this area right here, it's going to be very tight quarters up there, right? We'll have to thread the needle if we want to be a buyer, and we'll talk about that right as we go through the rest of this analysis. So we know we're bullish. Nice strong bull move up. We're getting back into the range though. I don't want to trade inside the range. That's why I call it the no trade zone. I want to be a buyer on this, but I don't want to buy inside that range. I want to buy down inside, ideally inside this 89 to 86 area. And a lot like on crude oil, I'd like to see us get rejected off of that range, right? That'll get us below the moving average, allow us to see some sellers, right? Take the bait. And once we do, we can look for that failure into pullback combination. Now, sometimes we don't get sometimes we'll get the failure, but we won't get the pullback. You can see an example of that back here, right? We run down, the bears try to sell right back here. We run down, the bears try to sell off the moving average. And you can see right there, right? The buyer's got a nice, easy scalp going back up. What I always teach my clients is the size of the setup, size of the target, right? So a quick first target as you're going. And we, of course, make sure we stay outside the range. So the bottom line is the same way these sellers failed, right, and went back into the range there, I'm looking for basically the same thing. I want to see us pull back. Again, I got a hidden channel down here, my buy zone down here. I'm looking for that seller failure. I'll look for those bears to sell that pullback off the moving average. We'll look to buy into their stop losses, and we'll look to that buy off that pullback. Again, I call this a failure into pullback combination. Now, also like oil, right? Also like oil, if we do go up into that range and we start sitting tight up inside that range, not a lot changes. I still have my eyes on this area here. I want to get underneath the range, right? A good distance outside the range, because again, I don't want to be too close to that small range. Wait for those breakout pullbacks. Sellers to commit, right, and buy into their failures. So we'll call it two-try failure pattern underneath that trading range. Now, the third scenario here, as the market tries to rally higher here, this is where things will get interesting. Okay, one side of it is if we get stuck inside that range, I'm going to have a hard time buying as we go higher. I'm not going to lie. It's going to be difficult to thread that needle because momentum won't be as strong. But if I can keep on running, now I can use that two-try trap pattern, and I can look for a trap low before we get up, right, to reaching our milestones up here, which, again, I would think is going to be that trend line. Right, so again, I'll call that a two-try trap pattern as we go. We might see a 1, 2, 3, 1, 2, 3 reversal off of that moving average. If that's the case, mark up the high. I'll adjust my channel low, and I will definitely look for a buy off of that low. Even though it's the top of that range, that momentum will be so strong at that point, and everybody will be piling on before they miss that retest of that trend line. So, those are definitely some things to consider here as we go higher, right? So it's going to be the failure pattern into pullback combination off the low, right? The two-try failure if we get stuck inside the range, right? Seller failure, pull the string back up into the range, or it's a two-try trap off that high, or a 1, 2, 3 breakout, right? Or 1, 2, 3 reversal in this case, right? Into a hidden channel pullback. And again, I'm just simply marking up the charts right now. I'm moving quickly here because I know most of you guys, right, have already taken the free course. But if you haven't grabbed the free course yet, again, reminder there, right, everything will get easier once you go through the proper training, right, and you see how this entire strategy works. So grab the link in the description of this video. So those are 3 different scenarios here, right, to be a buyer for tomorrow. Now, how do I sell this market? Well, being a seller, first of all, if we go back into the range and we sit here for a while, that is definitely one thing I need to see, because if I can get that, then I can go up And we talked about this on oil. It was a small variation. What was it called again? It was called a nested. Remember that? One try for the bulls, two try for the bulls, and then back down. Remember that? That pattern, right? It's a lot like this one back here where we go up, the buyers try once, the buyers try twice, right? And we go back down. The bottom line is you just don't want to get too aggressive going against the trend. Okay, not to mention the day after this kind of, quote unquote historic trade deal being signed. So I would assume a lot of people will be bullish on this. So I do want to make sure before I try to sell that high here. Again, there's two pieces to this puzzle. One is you've got to see the range take form again. If we just blow right through that range, I'm not even thinking about being a seller, right? If we blow right to that range, you got to stick to the buy side. But if we sit inside that range going sideways, then absolutely I can then consider, right, that nested failure pattern and sell off of that high. Now, what if this thing just tanks? That's always potential, right? It's always potential. It doesn't look likely right now, but it definitely is, right, potential. Where do these bears want to go? They want to go back down and retest those lows, right? Simply put, the buyers always want to retest the highs and the sellers always want to retest the lows. So before I try to sell that though, I've got to get momentum on my side. So how do I get momentum on my side? Is a strong move down enough? No, it's not, because if we get a strong move down, you know what's going to happen? Sellers will come in, they'll try to hold that pullback, right? But guys like me and people like you guys, you're going to know better than that, and you'll look for that failure to fail, right? You'll look for those bear pullbacks to fail, and we're simply buying right back up into that range. So a strong move down is not enough. It's a good start. It sets the table. But I mean, how many times do we see a strong move down where they fail and the market rallies right back? A lot, right? So we can't just assume a strong move down is enough, not in this much of a bull response. Again, like I mentioned earlier, when the buyers defended that low like that really, the buyers are beating their chest right now, right? They're getting all chesty out there. The sellers have to prove it before they're going to give up on this. And what does the proof need to be? The sellers need to hold that pullback. Right? They got to hold that pullback. I'm not going to try to sell that pullback. I wouldn't recommend that anybody else to sell it either. Well, unless, of course, right, you're a rookie not watching my newsletter and I'm trying to buy into your stops, right? In that case, please try to sell that pullback. So, right, that'll be cannon fodder for our long trade. But the bottom line, though, is if they can hold that pullback now we've got that 1, 2, 3 reversal. I can mark up that low, mark up that low, find that hidden channel. Notice how I draw the hidden channel, right? It's not drawn from that medium swing. It's drawn from the major swing. That gives you that little edge that not a lot of people are going to see that level, right? And of course, that's our sweet spot right there, selling the high of that. Again, I call that a 1, 2, 3 reversal into a hidden channel pullback. And again, your target is back down to retest those lows. Now, one thing I will keep an eye out for tomorrow as well is if we do run up, and this kind of goes along with oil as well and starts going sideways up here, right? If we do start going sideways around that big round number, keep an eye out for that range as we form it. And if we see a range, well, we'll do the same thing we did today, right? If we see a range, we'll wait for the market to run lower, wait for the bears, right, to sell off the moving average. Now we know where the stops are, and we'll try to get it running back up into that trading range. That's the same idea here. Just remember, though, you got to wait to make sure you actually get the trading range up there before you go trying to buy that pullback. Now, don't forget, again, make sure you grab the free course. That way you can learn more about these and kind of see how these patterns really work. And again, tomorrow morning, we're going to do all this together, right? So make sure you're there tomorrow on time, and we'll do all of this together in our trade room, 8 o'clock Eastern time. Now, I saved the best for last. This is the stuff that's going to make your brain expand a little bit here tonight. So what do we know about the Nasdaq right now? I mentioned the Nasdaq looks similar to the S&P, but there's a very big difference here on the S&P. There's one big clue, right? We know the most important clue on this chart was this bullish move up into a trading range, right? But then what happened? You see what happened though? Now we know they got that move, they held it, and they took out those lows. This is a big difference between the S&P and the Nasdaq, and honestly, it's the difference between and what should be an easy retest the high for the S&P. But whenever I see a market go up like this, come all the way back down, tap those lows and bounce, I start to think of it as one big range, right? because now we have a double bottom. We got two bottoms. We're only one retest that high now to cause one big trading range. Now, the point I'm trying to make on this, because you might be wondering, well, how does that change anything? The point I'm trying to make right now on this is look where we are. If you take this range right now, we are right in the middle. So we don't have it yet, but I won't be surprised tomorrow if we end up seeing this thing start to kind of flatline here, right, inside the middle of this, again, what is now being seen as a bigger trading range. Again, the S&P, they defended those lows. So the S&P, again, like I said, the bulls are well in control right now. This is, I would say, you've got some very strong momentum here for the bulls, right? But you've also, again, the big elephant in the room here. Big move down. This could easily reverse and head back lower again. I think the bulls have a little bit of the edge because we obviously think this now is one big range. And the natural tendency for a range is to retest the other side, right? Rotate back and forth, low to high, high to low, and then low to high. So I definitely think the bulls have that subtle edge right now, especially with the S&P kind of leading the way right now. But I am going to watch closely tomorrow because I do think, right, if this thing starts to fizzle out right in the middle here, we have a good idea of what's going on, right? We're right in the middle of that trading range. So that bullish range, I do think that's going to be a magnet. I do think that is where most of these buyers want to go. Ultimately, they want to get back up and get back to that 9,100 high, right? They want to get back up to those big highs here. But again, that level coming over, right? That retest of that low is really a big spook. So where do the buyers want to go? Back to retest the high. The sellers in the market, they want to get back down to retest this low. One thing I can see on the chart here that I'm really kind of thinking might be a good plan of attack here is this trend line. At first glance, that trend line doesn't look very important, but I think that trend line, I think the biggest thing for the trend line is it tells me I can probably buy a pullback here nice and low with the right pattern, of course, right? Then I also think if we go higher here, I can probably use that trend line on the opposite side, right? So I do like that trend line here. I think it will be pretty useful for us here tomorrow. So let's talk about buy side, sell side, and then we'll go forward from there. So on the S&P, I use a little bit more aggressive buy patterns. On the Nasdaq right now, because of that big move down, because they were unsuccessful at defending those, well, I mean, they defended the lows, but they took out the lows, which in all reality, it's a very neutralizing, right, little bounce off that low here. The bottom line is I do want to, if we get that pullback off this trend line here, I do want to buy nice and low right now. I got back-to-back dojis right there. Anytime we see back-to-back dojis, we know one thing is for sure. That level right there, right, is on everyone's radar. I'm not sure why that 90-47 area is so important, but it clearly is, because anytime you see back-to-back dojis like that, right, something's up. Dojis are trading ranges. Ranges are where the most amount of volume is traded. And of course, if you're a volume profile theorist type of person, right, you know that markets love to pull back into high volume areas. So I would anticipate that pullback to 90-45. My only big problem on this, though, is this overall, right, big bear move down. So how do I buy when I want to protect myself from the bears? I let the bears exhaust themselves. I let them try once. I let them try twice. And because we have that trend line overhead, what I really want to get tomorrow is the bare minimum will be a double bottom on this. What I really want on this, right, is what I call a crown reversal pattern. Now, this is a little bit of an advanced way of applying the crown reversal pattern, but the idea behind this is pretty simple, right? We know, first of all, the bears have a shot at really making our job more difficult, right? Because we know the bears had that big move down, and again, they were able to retest those lows. Big clue. So we want to make sure we respect the bears. How do you respect the bears? You let them try a couple times, right? You don't just get aggressive and buy into their stops, right? Because they're probably not going to give up after one time. You let them try a second time. It's just like those nested failure patterns that we talked about earlier in tonight's lesson. So I'm looking for 2 tries, but then also, too, we got that trend line. And I'll tell you right now, I have learned this lesson so many times the hard way that when you've got this trend line overhead that everybody sees, I mean, even somebody with 2 weeks of experience can see that trend line. What's going to happen is buyers are not going to get too aggressive. They're not going to want to buy into that trend line. So what's the best buy setup to avoid buying into resistance? It's a trap. Right? We've talked about these trap patterns a lot, right? Trap patterns are my go-to pattern whenever I'm worried about I'm buying into resistance or I'm selling into support. So this is I would say a very advanced setup because you've got the bears trying to take you out. You've got that trend line as resistance overhead. So I really look forward to kind of watching this develop. Again, I call it a crown reversal. It's kind of like a nested failure with a little trap on top, right? A little cherry on top, that trap. Now, the easier money, I won't lie, right? The easier money here would be as we go higher here. That would really take a lot of burden off these buyers, I think, here, if we can keep going higher here. At this point now, I think my favorite way to do it would be a two-try trap pattern, right, using that trend line, right? So we talked about this earlier, right? So if this thing keeps going higher, one of my favorite entry patterns whenever the market's really blitzing higher here is profit taking once, higher high, sellers come in, right, and a trap low. So that is definitely a pattern I'm watching. I could only be so lucky if we're able to get it off that trend line. So you can kind of see how that might work, right? So profit taking, higher high, trap low. You can see that, hopefully you can, right? But it seems to make sense, right? As we go higher here, again, profit taking first, bears try second, trap low off the same trend line that we're using as resistance before. Okay, so one trader's resistance is another trader's support. Okay, so there's two ways I want to trade this trend line. Now, obviously, too, right, let's say, for example, the market rallies higher. We see a nice sharp pullback that will probably get us below the moving average. Look for a seller failure, right, into pullback combination. That's another setup we'll watch for. Again, kind of all using this trend line, right? We get above the trend line. And I'll be very honest, I don't need it to pull back off that trend line, right? Especially for a failure pattern, right? For a failure pattern, all I really need is to get underneath that moving average. But I'll tell you right now, if we can use that trend line as a level of support, then by all means, let's do that. So those are some scenarios I'm watching for as we go higher. Now, again, right, do we go up and get stuck inside this range? If that's the case, it's a relatively narrow range. I want to get underneath the range, get that moving average coming over, get those sellers, those poor counter trend breakout pullback sellers. Their stops are going to be desperate to get hit, right? We'll look for that seller failure pattern, right? Again, don't forget, no need for a nested failure. This will be a regular failure pattern because momentum is bullish. And let's see here. What if we keep going, right? If we keep on running higher here, like blowing right through that range, the objective will be to retest the high, right? 1, 2, trap and go, right? Don't forget, you don't want to buy high up there. Know where they're trying to go. If we do, and again, this is all kind of the prerequisite of this is it's got to rip. Right? It's got to rip higher. None of this sissy stuff going higher here. It's got to rip higher, and if you can get a nice big rip higher, trap low before you get back up to retest the high. We just talked about this today in the trade room. I'm never somebody who likes to chase, right? So you'll probably never see me in our trade room chase after these markets. I'm disciplined, I'm patient because I know that there will almost always be that shot to get in if you wait patiently for it. So now we got some good ways to be a buyer on this. How do I sell this market? Okay, the sell side is going to be a bit tricky because, as we go higher, it's not going to be easy to sell it. You really won't be able to sell this market until you get that two-try trap, like we talked about on the S&P. I think that trap pattern would probably be the only way to sell it down there because remember, this is the low of day now, right? 90.22, 90.23, that's the low of day now. So it's not like the S&P where the S&P has all this space to go as we go down. The Nasdaq, hello, right? You're right into the low of day right there, right? And that's where the objective is. We don't have a lot of open profit potential for the sellers. And usually that's enough to make that really difficult to sell, right? Just the fact that there isn't a lot of open space down there, right, is really where you've got to be careful. Look for that trap. Again, I call it two-try trap pattern, right? Now, the other scenario would be we go back up into that range and we chill out for a while, right? So the market goes back into the range. We hang out for a while, right? And you can see what happens, right? We go into a range. Market jumps up, the buyers try once, the buyers try twice, and it collapses back down again. That's kind of the same thing we're looking for here tomorrow. And again, it's all kind of predicate or prerequisite, I guess, would be the wording for it. I'm not sure what word that was. Predicate? Is that I don't know. Anyways, I'll let you guys figure that one out. But the bottom line though is that kind of the prerequisite. I'll use the words I know. How's that sound? My mom. Hopefully you're not watching out there. My mom's a school teacher. My mom would be shaking her head right now, going, Joseph, did I teach you nothing? Anyways. So as we go right back into that range, the prerequisite, back on track, focus, JJ, right? Now I can go up, right? Get that 9,100. But again, remember, we're bullish right now, right? Remember, it's got to sit sideways in there. That will what? That absorb momentum. If we can sit sideways inside that range, that absorbs that market's momentum, and now I can go 1, 2, and sell back down from there. Same idea as we saw before, all right? Or, right, don't forget, there is a chance we go sitting inside the range, right? Something happens tomorrow and the market goes, bam, 1, 2, 3, breakout. Mark up the highs, mark up the low, right? We talked about that breakout pattern as we're going. That is some food for thought for tomorrow. We'll cover that tomorrow, obviously, in the trade room once we get there. But now, again, the last thing I want to make sure I mention is if we just get up here and we start sitting and, slopping around up here, right? Just call it a range, right? Call it for what it is. It's a range right in the middle of that bigger range. If that's the case, get underneath it, seller failure, and buy back up, right? The buyers have momentum on their side if they go sideways inside that range. Again, I mentioned earlier, we've got earnings overnight here. Well, actually earnings before we open tomorrow. So be aware, Nasdaq is one of those slightly less liquid markets that are susceptible to very grindy, as you can see there, very grindy price action in the pre-market. So be careful. And again, right, make sure you come out and join us and we'll do it together tomorrow morning. It's so much easier to trade this stuff when you're doing it by looking over my shoulder. I'm going to make sure you're not getting in trouble, right, like I did when I was a rookie, doing it all on my own. Let's wrap up tonight on the gold, the yellow metal. What do we know about gold? We know that gold has a bullish trend. Anytime we see a bull trend, we know we want to buy at support levels. We also see we got a bull channel. Okay, that channel makes for a great area of support. But, I'll tell you right now, when I see a channel, I actually, and I'm going to be very, very clear on this. I'll always look for patterns at the low of channels, right? There was a beautiful little seller failure off that low, right? Earlier on, right? Seller failure off that low. So I'm always looking to buy off the low of a channel. But make no mistake about it, the best entries are usually going to come just underneath the low of a channel, right? So you really want to get underneath that low, because what it does is it gives you a good risk-reward ratio, and it oftentimes fools the sellers into thinking the market had reversed, right? So yes, I do want to be a buyer underneath this, right, or at the low of this channel, but I'd love to get down into the low, right, underneath that channel low, make these sellers think, right, about shorting this, and then I can, right, buy nice and low. That gives me, again, that seller failure pattern. I'm just kind of using an illustration of it right here. You can see example right here, example right there, right? They happen all over the place on these charts around the low of that channel. But there's an elephant in the room on this one. Right? What's the big elephant in the room here? It's not the same elephant that we had on the previous charts. Count them up with me though. Count them up here. 1, 2, and 3. Now, there will always be an exception to every rule. This is just the way trading works. Trading is one of those businesses where 2 plus 2 doesn't always equal 4, and that's one of the hard parts about trading. Trading is about probabilities. There's never perfect. So there's always an exception to this rule, and we'll go over more of that tomorrow morning with our clients. But most of the time, whenever I see a market go 3 legs in one direction, oftentimes we see a trading range the following day. Now, tomorrow, don't be surprised why I can have this range here, right? So will it be a range? If we get a range, I have to kind of adjust this trading strategy. So we're going to talk about how to kind of budget this, right, if we get a trading range. Buyers, of course, buyers are shooting for a retest of that 1564 high. Sellers originally want to take out these lows, but I would imagine the sellers just want to get back into that range down there, right? That range from yesterday's, right, trading session. And speaking of yesterday, by the way, I apologize for leaving you guys hanging. I sent an email out to everyone on our list yesterday evening. I apologize for not sending the video out last night. We had some power outages. They were doing some construction in the street outside of my office, and the power kept flicking on and flicking off on me. And after 3 attempts to record the video last night, I kind of threw my hands up and said, heck with it, we'll come back tomorrow. So if you're not on my mailing list, make sure you join the mailing list. You can join the mailing list on our homepage at schooloftrade.com, on the blog at Sideways Markets. Again, I'll put all the links in the description, right, of the YouTube video. I sent an email out to everyone on the list, but if you're not a member of that list, I apologize if I left you hanging there last night. The bottom line, though, is, right, as I was saying earlier, that range down there, right, that will be where the bears will probably be hunting for if we can get this market going lower. So let's talk about a couple different things I'm thinking here right now, right? The first thing I'm thinking is I want to buy a pullback. We know we're bullish. I want to buy a pullback. And as I mentioned earlier, I'd like to get down, ideally, just underneath this channel, right? Bring the moving average over, get those sellers to foolishly try to sell off. And a lot of times what happens is the bears will try to sell off the underbelly of that channel as well, right? That's why this pattern works well. It'll be a failure into pullback combination. Now, a lot of times we don't get that pullback. And what will happen is it'll trigger the failure, but then it will rip higher because obviously it's a short covering rally. The sellers got beat, right? The bears now become buyers, and the market takes off for the upside. If it takes off for the upside, don't chase after it. Wait for that two-try trap pattern. That'll be your next best option. Does that make sense, right? So if we don't get the failure into pullback combination, which is very, very common, by the way, we usually see the market will fail off the EMA. It'll go up and pull back, right? It'll fail off the EMA. It'll go up and pull back. It usually does that. That's, as you can see, right? Very, very good tendency to do that. But if we don't get that, right, don't forget, as it runs higher, look for that trap. That's one more thing we're watching for here as we go. Now, there is a chance. One thing we do notice here on the gold, right, every time we saw higher highs, see what happened? Big, strong pullback. So if for some reason things really get ugly down here, how would I buy it from there? I would use the nested. So if it really dumps, we're not talking about reversal here yet, but it really dumps here now what I'll do is the bears try once, the bears try twice. Again, we'll give them the benefit of the doubt. What do we call that? A nested failure pattern, right? Okay. Now, how does the market turn sideways? What if the market turns sideways here? First of all, if we do get this range, and I would anticipate this for tomorrow, if we do get that range here going into the overnight, right, into Europe and the U.S. tomorrow, if we get a range, this channel pretty much takes a back seat. Okay, anytime we see a range on the chart, we know the range is the king or the queen or whatever the top of the top of the food chain is, right? We pay attention to the range first. So once we know the range, I take the size of the range, I find my buy zones, right? We talked about those buy zones and sell zones on the S&P and the Nasdaq today, right? So once we find that range, I find my buy zone by using a very simple calculation. You'll learn all about it in the free trading course. And I'm basically looking to get underneath the range. I'm looking for that bear, right, breakout pullback, looking for it to fail, and buy right back up again. It's the same basic pattern. And, you'll notice, and I had someone ask, why do you use the same stuff over and over again? Well, that's what trading is. Make no mistake about it, guys and gals. Professional traders, they're not like using dozens of patterns. The best traders in the world have only a couple patterns. They know them very well, and when they see them, they load the boat. It's unreasonable. It's unrealistic to expect yourself to have a dozen different patterns. You know, the best professionals in the world, they only do a couple things really well. And they do it really well. They double down on that. And that's what I've done with my patterns, right? So make no mistake about it, guys. This is not CNBC, right? My job is not to entertain you. I'd like to keep you entertained, right? But my job tonight is to make sure you're ready for this. And the same patterns happen over and over again. So if you find it boring, I apologize. The good news is that even though trading can be boring sometimes, you only have to deal with it for a couple hours a day, and then you can do the rest of the exciting stuff you want for the rest of your life with a bunch of money in your pocket too, right? So don't worry about the patterns being boring. Boring is good, right? Surprises are not what we're looking for. We're not looking for exciting. We want nice, easy, repetition, reliable, dependable, things we can pay off our mortgage with, things we can put our kids through school with, right? Things we can wake up and be confident about. Okay, anyways, so again, you'll notice the patterns repeat themselves. Of course they do, right? That's what you want. You want to use the same tools in different ways. Get good at using those tools and just hit them hard every time that you see them. So watch out for that range. And the reason I say this is because if we go into that trading range, right, see, if we go sideways here, right, I'm not trying to buy the low of that channel now. That is no longer a very desirable a buy now. Does that make sense, right? Now, if that range is there, now I want to get underneath that range, get those sellers to wrap the noose around their neck by trying to commit to that pullback, right, and then buy into their failure. That's the point that I'm trying to make. Now, what if we go higher here? Okay, if we go higher here, where's the objective? 64. Okay, so it's a strong move up. 1, 2, 3. Boy, a 1, 2, 3 pullback or a 1, 2, 3 breakout's probably not going to work very well. So you're going to probably have to go up, get a strong move up. 1, 2, trap, and go. Okay, I will look for that 2-try trap pattern as you go. Also be aware, we may see this thing fly higher and go sideways at these highs. And of course, if you get a range, it's that failure right into pullback combination and going back up into that trading range. Last but not least here on the gold, how do we turn bearish? How do we turn bearish? Strong move down, not enough. Got to hold the pullback, right? Got to jump off that moving average. Right? Strong moves down are not enough. They're not enough. How many times did we see a strong move, a strong pullback? That's just buying low for a professional. So once they get that strong pullback, make them prove it. Show they hold that pullback. Mark that low. Mark that low. Mark that high. Again, see how I draw that channel now, and now we know where we're trying to sell off of that high. Again, right, keep your eyes on that range back here. That's probably where they're trying to go next. So guys, a great plan of attack here for the gold. Be careful trying to short this market, which reminds me too, if we do end up going sideways here inside the range, can I short off the high? I can. We go up, the buyers try once, you got it, nested failure, right? Just respect the momentum and then you can sell it back in. That's if it goes sideways. If it goes sideways, range-bound market, buy low, sell high, avoid the middle. Guys, we are just getting this party started. Don't forget, if you haven't done so yet, grab the free course. It's linked up in the upper right-hand corner. But most importantly, come out and join me tomorrow because I want to make sure you don't miss another great opportunity. We're getting great setups right now every morning in our trade room. The easiest way to get registered for our advanced course, which includes all access to our video classes, our daily trading sessions, all the ongoing support, all the tools, templates, worksheets, and cheat sheets. I'll put all the links in the description of the YouTube video. If you're on the website, it's the advanced course. There's a video here, walk you through it. If you're on the blog right now at Sideways Markets, I'll put a big blue button for you below the video tonight on the trading blog. As always, I'm here, so call the office, use live support, right? Whatever it takes. I'll be here all night, right? Those always connect to my cell phone, so if you want to pick up the phone and call me, and I can walk you through getting registered for tomorrow as well. And as always, if membership isn't quite right for you, that's no problem at all. Whatever you do, though, do not finish up today without registering for that free trading course, right? Because I want to make sure you and I get the most out of each other every evening on this video. How we do tonight? Right? Did you learn something new? If you did, right, give me a thumbs up on the video tonight. Boy, almost an hour into this video right now. If you're still here right now, give yourself a thumbs up. Let me know you're still watching in the comments section below. And I'll see you guys tomorrow morning, 8 o'clock Eastern time, as always, in our trade room. And if not, we'll come back and see you guys tomorrow night, same time, same place, on the next edition of our nightly newsletter. My name is Joseph, by the way. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.